Hello, everyone. Good morning, good afternoon, wherever you may be. It is 11:30. I am in Buffalo, New York, and it's snowing. Not unusual for this location, but just putting that out there in case that messes with my connectivity. So I'll try to keep an eye on the question box here just to check in and make sure you guys are getting good quality sound. But let's dig right in since I only have 45 precious minutes with you. So the title of my talk is Not Your Mama's Momentum, How to Profit by Going Beyond Overbought and Oversold. And before we get into the fun content, friendly reminder that trading and investing can be very risky business. So it's your responsibility to evaluate any information, opinion, advice, or other content contained in this presentation. So my name is Hima Reddy. It's Reddy like Ready Ice, Ready Bikes, but don't worry, Tanya, no worries that you mispronounced it there. Reddy Laboratories, that's a stop. No relation, unfortunately. But anyhow, I've been involved with the markets for over 16 years, and I first learned about them as a teenager from my late father, pictured here. He was a doctor, but he traded very actively in his retirement accounts. So when I learned about stocks and investing and trading, I thought, hey, I'm going to go off to college and study finance and learn all about it. So I left my home state of New York, went to school at Indiana University, go Hoosiers, and studied super hard and graduated on time in 4 years. But when it came to learning about the markets, investing, trading, and how to actually personally be involved, I learned next to nothing. So my dad and I came to agreement that I would move back home, work part-time, and he would teach me everything that he knew about the markets. So he started off by handing me this book called How to Make Profits Trading in Commodities, written by this gentleman named W.D. Gann. Have any of you in this room heard of Gann? Please type a G for me if you've heard of Gann. Helps me know my audience and what your exposure has been to the world of technical analysis. So G for Gann. Okay, a couple folks in here. We've got Gene, we've got Paul. All right. Oh, Paul saying no, sorry. Ralph, Nicholas is a no. All right, just let me know if you do, because I can't discern real easily between yeses and nos as I'm looking at two screens, but awesome. Good to know who's aware. Now, what Gann did was he was in the early days of technical analysis, right around Dow, all right? And so his concepts, as you might imagine, being from the 1920s to 1940s, to me as a college graduate, it seemed a little strange that my dad was putting me onto this. But I said, all right, I'll read this book. What else do you want me to do? He said, well, I want to set you up TradeStation software. It's what I use. It's the best. And I still use it to this day. And what he had me do was the first thing he did once I had my brokerage account set up and downloaded the software was put me to a 1-minute bar chart, okay? Not candlesticks, not a line, not Ichimoku, not anything fancy, just a bar chart of the E-mini S&P. And he gave me the assignment. He said, I want you to watch this for 3 hours a day, every day for an entire month, okay? If you do the math, it comes out to over 5,000 minutes of expected attention from a recent college grad. Again, a challenge, but I said, all right, I've got this deal going on where my dad's going to teach me, so I've got to do what he says. Now, he was onto something, because what happened is as I started to read the book that Gann wrote and hear about his trading signals and forecasting methods, I started to identify these opportunities in the market. And again, I had no other education except what my father was starting me off with. After that month, and then another month, and then more time, I started to get really proficient at taking what I was learning in the book and applying it to the markets. And along the way, I actually took Gann's verbal concepts and turned them into graphic images like these to help me better understand what it is I was looking for. And they're flashcard size, so I would keep them up by my trading desk and use them to identify tradable patterns. Now, I went a step beyond this after some time, once I started to get really comfortable with the technical analysis, which I didn't know that that was what it was called at the time. And I started using the evening before, again, still on the E-mini S&P, I would write research, I guess. I mean, I didn't know it was, but I would write my thoughts about where I thought the market was headed and what it would do if that outlook didn't play out. And I called them the skinny on the mini, all right, because they were the down low, the key points, and the skinny, you know, is an American phrase for something like that. And it was the mini. So as you can see here, this is from summer of 2005. This is one of the earliest ones that I sent to my dad that I actually still had an email to capture for you. So I kept writing skinny and mini, learning how to trade, applying technicals. Now, here's something that happened that kind of turned my world around. I was writing the skinny and the mini and using it in my own trading, but my father, who I was emailing to just for accountability's sake, started using it, but he wasn't telling me because he didn't want to influence my analysis. And he was using it to apply to his ES trading, and he started making winning trades using the information in my report. So we were both super excited, right? It's the father-daughter learning, passing on of knowledge, and it was actually profitable. So we continued on, and I said to my dad, you know, trading is okay, but I love this analysis. This is what I want to do. How do I do this for a living? He said, well, I think you've got to become a professional technical analyst, and I think there's a designation out there that establishes that. So I went on and studied for the CMT, which is administered by what's called the CMT Association. This stands for Chartered Market Technician, and it's the CFA equal for folks who want to be professional technical analysts. And after I finished all the exams and got certified, I went on to work on Wall Street in an independent research firm for several years. Then I got my own chance to write a book on Gann's work because people knew my story of how I took Gann's complex concepts and made them simple. And so my book pictured here, The Trading Methodologies of W.D. Gann, A Guide to Building Your Technical Analysis Toolbox, was published in October 2012. Now, important housekeeping note, October 2012 was just over, 5 years ago. And I've checked with my publisher and my book is out of stock, so that's cool. But they don't plan on printing a second edition, not so cool. What's good for you guys is this. I'm in the process of getting all of that material back in my hands and my ownership so that I can turn it into on-demand videos, ebooks, all of the much more effective learning tools, I think, than just a pure textbook or handbook. So stay tuned by remaining on my mailing list or joining them if you haven't already in order to know what's coming that way. So after publishing a book, as you can imagine, suddenly your audience grows. And when you're with a big publisher like Pearson, you've got all these people coming to you and they want more from you. So that's when HimaReddy.com was born. And I had my book readers coming to me. And so I gave them the Skinny and the Mini because I was already writing it for free. I had webinars and lectures like the one here today, gave those folks the Skinny and the Mini. And of course, they were my professional technical analysis colleagues. These folks were using technicals every day. And they also got my Skinny and the Mini. So this went on for some time. I got married and my husband and I moved to Minnesota. We moved there for his job. He's pictured here. He is a cancer surgeon and he is originally from Wisconsin, neighboring state. And as you can see, over 6+ years of marriage, he's successful in converting me into t-shirt wearing and a bratwurst eating Green Bay Packers football fan. So given his great job that he moved for, his Wisconsin roots, and the job I got in Minnesota at Equity Research and Investment Bank, we thought, okay, we're going to be in the Midwest and working in an investment bank, I obviously can't put out my own research. So I had to come back to all these folks who were getting the Skinny and the Mini and say, hey, sorry, can't send it to you anymore. And they were super sad. And they started telling me, oh, we were using your supports and resistances. We were using your market timing points. We were using your trend lines, all for free. And so obviously they were sad to see it go. But I thought to myself, you know what, I've got to find a way to bring this back someday. So after some time, my husband and I actually moved back to my home state of New York, but upstate, like I mentioned, to Buffalo. And I left my sell side job and I thought, okay, this is the chance to get in on the Skinny on the Mini for good. So what I did is I went back to all these folks and I said, look, I'll start doing a monthly subscription program, and they started happily paying me for it. Okay, take a second now, guys, to process. People started paying for something that they used to get for free. This is the value that it was to them. Okay, that they were willing to now put over their hard-earned dollars and cents. Now, on top of this research, they wanted to learn how I was conducting all of this. And by now, it's been, 15 years that I was doing this and never really formally taught it except in the realm of the CMT. So that is what brought me to doing programs like this one here with you today, showing the tools that I use so that you can go apply them outside of the ES to any market and any time frame. Now, things have come a long way with HimaReddy.com. And if you go to that page and you click login at the top, like most financial education websites, you get taken to a member portal. And what I'm going to teach you is something out of the RSI Power Zones workshop that's on that page. And I'll let you know more about the workshop and how you can get access to it at the end of this presentation. But first, I want to make sure we all are on the same page about how price and momentum work, because the name of this presentation was Not Your Mama's Momentum, right? So I'm doing things differently. And we need to make sure we're all on the same page about that before I go into example after example. So I told a long story, but now you know why you're here listening to me and sticking around. So just to make sure everyone's on the same page, please type PM if you see a price and momentum slide. And I'll get a swig of water here. All right, awesome. Thank you, Steve. Thank you, Steven. Okay, great. So if you've used momentum, this will be a refresher. If momentum indicators are new to you, then this is a simple introduction to the concept. So when prices are in an uptrend, a series of higher highs, higher lows, then momentum is generally rising. Okay, momentum moves with price. Now, here's the thing about momentum is that price, as we know, changes from uptrends to sideways to downtrends, etc. And so when price generally peaks, momentum is usually peaking before price does. Okay, the momentum peak leads the price peak. Then you might end up in a situation of a sideways trend, or you might go right into a downtrend. For illustration purposes, let's keep it simple. Uptrend, downtrend. In a downtrend, momentum is generally falling. And the falling momentum usually results in momentum putting in a trough or a low before price puts in its final low, okay? So when you look at this image, the takeaway is that momentum is a heads-up indicator. It provides a heads-up on what price might do. So in the category of technical analysis, there's indicators that are leading, indicators that are lagging. Momentum is definitely a leading indicator. So when you take this application and you take it to something that's now become part of my life, quick pop quiz now. What football team did I say that my husband has converted me to being a fan of? It's one of those upper Midwest ones. Yes, Laura and Camp, yes, the Packers. Oh, Laura typed in Okay, cheeseheads, yes, Keith. So this is the best image I could find to represent the Packers. It's got their green and gold, and it kind of looks like Aaron Rodgers, so I'm happy with it. Now, if you don't know football, don't worry, guys. You don't have to learn all the rules to understand this analogy and how we're going to use it for momentum. You just have to understand the following, all right? Of the Packers' many rivals, if you ask my husband, the Chicago Bears are the biggest ones. So when you have the Packers and the Bears on a football field, which the green space on the football field is 0 to 100 as lined up here, okay? Then you've got these two end zones. So what happens is that the Packers, when they have the ball, they've got to get through the Bears defense and get to their end zone to score points. Nothing happens in the middle of the field that matters. You've got to get to your zone. Okay, that is the takeaway that will directly translate to RSI momentum in a moment. When the Packers, when the Bears have the football, they've got to do the same thing. They've got to get through Packers defense and get to their end zone. All right. So let's take this football field, turn it on its head, and we're going to take the 0 to 100 and expand it out to include the end zones. Shrink it down, plop it on the bottom of a chart, and here's what you've got. So this happens to be a chart of the E-mini S&P, continuous contract daily, and it's about a 14 months, 23, okay, so almost year and a half segment, excuse me. So anytime I'm going through charts with you guys here, because we're gonna go through a lot of them now, look at this line above if you were at all lost on what the chart is, what time frame it's covering, etc. Okay, so these are daily bars, and this is the E-mini S&P, my baby. But don't worry, we're going to go through other market examples as well. So we're taking this football analogy and putting it and applying it to the RSI. That's the Relative Strength Index. Now, the RSI was put forward by Wells Wilder in the late 70s, right? And he put it forward with a standard setting of 14 periods. We are not changing that. That stays put, okay? So for those of you who are taking notes, which I strongly advise to do so starting right now, standard setting 14 periods does not change. Everything I'm going to teach you, the signals, the rules, etc., will not have the same results if you change that setting. If you want to test it out, go for it, but that's not what I'm teaching you, okay? 14 periods, super important. Now, the standard approach to the RSI is that you've got these fixed levels of overbought and oversold. So 70, as you can see here, when you go above 70 on the RSI, and this is the default trade station indicator, this is what it does. It turns red. Hey guys, in your minds, when you see red, what do you think? Buy or sell? Type in the room for me, please. I think we all will agree on this. But red means what in your world? Buy or sell? Yes, Vishal, Lee, Paul, I would agree that sell is what comes to mind in the education that we've all received. So do you see how when you have these little moments of red, but they're in the picture of a vast uptrend, that may be a little bit dangerous because it may get you to want to sell even though the market's not ready to sell yet. Okay, that's the challenge of the standard RSI when you're in a trending market. And on the flip side, if you go below 30, then that's considered oversold. And in this situation, the blue equates to a buy. So when you go below 30 and then you see this blue, it makes you want to buy. Well, this, which happens to be election day. I know that just because that bar was very unique. Okay, this bar right here is election day, and we can see we had the blue signal. Fantastic. Raise your hand, please type yes in here if you would have liked to go long this market on this day. It's a great signal, right? But what's the problem with it? Even though it got you in, and if you were in theory staying long E-mini futures, you'd still be long. What about everything along the way? What about this low and these lows and this low and this low? You have no way to use the RSI to get in on that. Right? So these are some of the limits of the traditional approach to the RSI. Now, the same time that Mr. Wilder put this out, a team of technicians started studying the RSI in depth. And remember, this was the late 1970s, so they were very limited with computer application. A lot of this was by hand. And they discovered something that I'm going to show you. What I showed you, I learned about in my CMT studies, but then we're going to take it a step further. I'm going to show you how I've made it my own and made very specific setups around it. Okay, so when it comes to using only the standard approach to overbought, oversold, we're going to call BS. And we're going to go back to the football field and remind ourselves, the Bears, the football team, they need to get to their end zone to make anything happen and score any points, right? So just in the same way, the market bears need to move from their zone to another one of their zones to make the RSI more meaningful to us. So the first number to write down, type in an app, put in your phone, whatever, this is the time, guys, is the bear resistance power zone, okay? I call these power zones because the zone reference comes from football, and they're very powerful in my application, so power zone. 55 to 65 is where a bear market, a series of downward prices, should find resistance, not up at 70. And 20 to 30 is where a bear market should find support. Now, I understand that you're looking at that 30 and you're saying, wait a minute, that 30 is the same as the standard 30, yes. But if you look at an entire zone here, you're much less likely to get bullish too early because you're going to see and wait for it to pull down 20, 25, 27, 23, down to 20 potentially. And remember, RSI can move between 100 and 0. It's not limited to the zones I'm showing you. This is just the tendency they move in, all right? So please type the word bear if you guys have your numbers jotted down. Resistance, 55 to 65, support 20 to 30. Type bear for me, because this is important. We're going to see these numbers on the chart every time here, but this is the one thing you can just take away and observe on your own immediately. All right. Now the market bulls, as you might imagine, they have their zone. They live in the upper part of this chart. A bull market is supposed to get more and more overbought before price turns lower. So the bull resistance power zone is 80 to 90, and the bull support power zone is 40 to 50. Okay, 80 to 90 on the upside, not 70. We're looking to reach up to 80 to 90 and 40 to 50 for oversold. So look at this 40 to 50. Look at how many times on this indicator we got to 40 to 50, and that coincided with price lows on the daily chart of the ES that would have been really helpful to know about and be able to go long. All right. So the first question that I always get when I teach RSI Power Zones is, okay, Hema, we get it. You're all about the E-mini, so maybe you're all about futures, but does this work in other markets? Yes. RSI Power Zones can be used for analysis and signals on any active market in any time frame. Here are a few examples, and I'm going to go through all of these. I know, it's kind of amazing. We have 25 minutes, but we've got the foundation now. You've got the numbers. So now you're going to see how price moves through the zones and a signal that you can actually look for. So let's start with my baby, but let's go to a 60-minute chart, okay? Let's go to the E-mini S&P 60-minute chart. Now here is a recent chart I published out of Skinny and the Mini. How recent? I published this yesterday morning, all right? Actually, I published this yesterday morning, and so that's why there's a typo. This should be 29, okay? Monday, today's Tuesday the 30th, yeah, okay. So I published this and captured the image as of 8:25 a.m. Now, you're seeing all this blank white space. I will reveal that price action to you, okay? There's a question about, can this be used on tick charts? No, I do not recommend applying this to tick charts because tick charts by definition do not have steady intervals of time. They only move when a new tick is traded. And depending on the parameters of your tick charts, there's qualifiers maybe. So if you observe this on tick charts and it works for you, great, but I'm not teaching it for that. I'm teaching it for time frame charts only. But we've got a variety here. We're going to go down to a 5-minute even today, all right? So let's review the zones one more time. We've got the bear support power zone at the bottom, 20 to 30. Right above that is the 40 to 50 zone. We've got the bear resistance power zone, 55 to 65. Then we've got the bull resistance, 80 to 90. Okay, and every chart you'll see as I unfold those same numbers in the matching colors listed here. So when I published this chart yesterday morning, and my subscribers who are in the room today can attest to this, I had highlighted how the E-mini had been trending higher and the bull resistance power zones and support zones had been really nicely respected. So you can see this yellow highlight here rallied, got up to 80 to 90 before there was a correction lower. You see how if you had only waited for 70, you would have been hanging out waiting for a while for a tradable high to form or to exit your longs. After that, there was this kind of choppy price action, but look at what happened. Still, you held the bull support zone on 2 occasions. Those were part of your clues that we might break higher. And on Friday, I wrote with pretty confident text that I thought we were going to break higher out of all this. And we did, okay? For a variety of reasons, but the power zones were one of them. So this is the size of the move. And you can see that even with this big, strong move higher, bull resistance power zone is where the RSI went to. It didn't go to 70 and then just peter out. All right, how about another market example? How about stocks, and how about with a 15-minute chart? So I get asked about the same stocks all the time, especially FANG stocks, but let's go to another stock that I get asked about all the time, Tesla. How many people trade Tesla in here or watch Tesla? Please type the T for Tesla so that I know. Okay, so this is a 15-minute chart of Tesla. And again, I'm going to reveal the price action for you. And here you have an interesting setup, okay? These 2 numbers here represent the prices. The second price is lower than the first. It's very small and hard to see on the chart, but that's what the value is. It was a 15-minute chart. But look here, guys. You had a lower low in price, but a higher low in the RSI. What is that all about? Okay, so now we're going to apply a signal to the power zones. We're going to take this generic image of price and momentum, and now we've got the 14-period RSI. And look at this. When you have a lower low in price, but a higher low in the RSI. Now this is after a downtrend, a series of lower prices. This is called an bullish divergence. Okay, divergence just means 2 things moving away from each other. So a bullish divergence means, hey, we may get upside in prices when we see this pattern. So bullish divergence, now here is where it's all Hema-fied, okay? This is where in my 16 plus years of experience and my at least 10 years experience just with this indicator, I took what I learned in the CMT and I started to be able to decipher very specific setups. So a bullish divergence happening in the bull support power zone is when you watch for a buy entry setup on price. There's lots of different ways you can do this, candles, etc. But the point is that you can see that this led to a nice move higher on the 15-minute chart of Tesla. Okay. Moving along, just unfolding the price action. So here we've got another bullish divergence in the bull support zone. You guys might be thinking, wait a minute, what's the bull divergence? So I'm going to draw for you real tightly here. This is a bar-to-bar divergence, guys. They don't have to be big swings apart, okay? So between these two bars, you had a low and a lower low. You had an RSI low and then an RSI higher low, okay? So that's how my dad used to teach me, swing to swing, bar to bar. The more time there is in the signal, the more substantial it usually is. So a bar to bar divergence on a 15-minute chart, you know, it's maybe not as powerful as a bar to bar divergence on a daily chart or a swing divergence on a 15-minute chart. But in the end, it's still got the same rules that we applied in the last example. You watch for a buy entry setup on price. This was a nice run up as well. And look at this one. It led you right into the bull resistance power zone up here, 80 to 90. Now, one more thing on Tesla I'm going to show you, because every bullish signal has its bearish counterpart, or at least it should. So that way you are always ready to trade either side of the market depending on the trend. So here you got a situation where you had a higher high in price and a much lower RSI value. I mean, look at this difference, guys, okay? You had this move up in price and this very sharp move lower in the RSI. So, as you might imagine, this leads to the opposite signal from what we just learned. So here, when you've got a higher high in price and a lower high in the RSI after an uptrend or a substantial rally, this is an RSI bearish divergence. Okay, it's the exact opposite of the bullish divergence. Now, just like with the bullish divergence, here's specific setups. So you have a bearish divergence in the bear resistance power zone. Watch for a sell entry setup on price in this situation. And as you can see, this led to a sizable down move. And here's the thing, guys, along the way, you had support happen in the bear support power zone, but then resistance in the bear resistance power zone, okay? This is the value of using the power zones when you're in a trending market. In this situation, I get it, this would have fit the standard 30. But look at this one here, okay? This resistance coming into place was not above 70. 70 was up here. And if you were waiting and waiting and waiting for 70 for your sell signal, you would have missed it, okay? So I'd love to see you type a V in the room, guys. V for value, if you see the value of applying this range to the RSI, as opposed to just limiting yourself to 30 and 70. V for value. Okay, so we've got more examples here. Now, oh, there's one more example here in Tesla. Bullish divergence, but in the bear support power zone. That's a little different. We've got this green signal, but happening in a bearish zone. What do you do then? Then it's a little bit different, okay? What you should do is either exit your shorts if you have them, meaning collect your profits, or tighten up stops, protective stops on short positions, because it would be a very aggressive move to go long on this because you're still in a downtrend. And here's what happened after that. You can see we had a correction, but it wasn't really a tradable great long higher, right? It was very choppy. But even look here where it ended up. And this is just when I captured the chart, so I don't have it filled in after that. But we had bear resistance power zone, okay? So we've got two different time frames we covered, two different types of markets, and we're gonna keep going. Let's go to bonds and let's go to daily. I get asked a lot about the 10-year, a lot. So we're gonna go there. So this one out is there for my bond crowd traders. And this is the continuous chart of 10-year futures. And this is a daily chart, so we're going to see a lot more price action. Again, all this on the white is going to be revealed to you, under the white, I should say. Okay, so here was a monster signal that came in last fall. Started in the spring, in mid-April, continued in June, and then in September, it was just like staring at you. Triple bearish divergence. Triple just means that instead of the two highs, okay, I would just call it a bearish divergence if it was this. But I say triple because now you have three instances where price is moving higher, but RSI is moving lower. And this triple bearish divergence was in the bear resistance zone. So what's the setup for that? Watch for a sell entry setup on price. It's the same one that I showed you on the Tesla bearish signal, okay? This is why using the zones relative to the divergence and looking at the placement of the divergence adds so much more value on top of what the zones already give you. And well, hello. I'm not saying that we will all, if we were watching this, known to short right here. But if you came in and shorted anytime after that, or if you're day trading this or trading another vehicle that ties in this price action, and you kept your chant, your mantra as, let's short this, you would have been staying with the trend through yesterday, okay? Pretty sizable move there. And here are two examples of how along the way you would have looked at bear support power zone, bear resistance power zone to keep you in line. You wouldn't have got quite as excited by this rally right here because you would have seen that it's still just respecting the bear power zones. Okay, let's do another. I get asked about Forex a lot. Forex and a 5-minute chart. We're getting nitty gritty for getting down to a 5-minute chart, right? But it still works. So I took Australian dollar, 5-minute chart, and so I just freshened these up yesterday. So this date and time is not correct up here, but that's okay. You'll see up along the bottom here, this is yesterday. So I caught this yesterday. So this is basically, obviously by the time I'm looking at this chart in the US, this is after the Australian dollar regular kind of activity has slowed down. I mean, Forex is a 24-hour market, but you see what I'm saying about the folks out in Australia trading this. Okay, so January 29th, and let's just move along with the examples. Bar to bar divergence, bearish divergence in the bull resistance power zone. What do? You exit longs or you tighten up stops in long positions. It would be aggressive to sell short. It's not forbidden, but you need more information before you would go for a sell setup. This led to a nice move on the 5-minute chart, nice move lower, right? Either protected your longs that you may have had in this run up, or if you had the right tools, which I'll tell you more about in a bit, allowed you to trade this down lower. Again, a bar to bar divergence, higher high in price, lower value on the RSI. Bearish divergence in the bear resistance power zone. Well, this is where you can watch for sell entry setup and price. I should sound a little bit like a broken record now because I'm showing you the same setups but across different markets and different time frames. That was a hardy move, right? And look at where all this weakness came down into, deep into the bear support power zone. So instead of seeing, oh, 30 right here, oh, this must be the rally higher, oh, I'm gonna go long, instead of that happening to you, you would have stayed calm, you would have stayed objective and said, yeah, it came to 30, but we're still just in the confines of the bear support power zone. I need more evidence. And by that time, then you would have had this next leg lower. This was not a divergence, okay? This was just two lower lows as per price. But from there, we did see recovery. Okay, so this market was trading from the bear resistance power zone to the bear support power zone. I'm just gonna take all these drawings off, okay? This is January 29th, remember that, so you don't get confused. All right, moving on. Oh, well, that was, oh, okay. Sorry, got confused. Now, I've showed you a variety of examples. I still have some more, but you're probably wondering the following. Okay, Hema, so do I basically just buy and sell back and forth between the zones and look for divergences? No, because if you do that, then you might get caught in something like this. Remember this chart? This was the first chart I showed you when I said I'm going to show you different examples in different time frames. But look at how we had this funky trading action in price, kind of higher highs or attempted moves higher, but then lower lows. Okay, I see this honestly as like a diamond pattern, but a strict technician would slap me on the wrist if I said that. Because first of all, diamond patterns on intraday charts, again, on Wall Street, most people don't take to heart, they don't take seriously, they don't publish in their research. And diamond patterns, if you go read Thomas Bulkowski's book on patterns, I believe they have somewhat mixed results in terms of topping or bottoming. So they can be a continuation signal, and that's what they were for me. So by a diamond, I mean this, okay? And so it was this breakout higher that I was really confident in on Friday. But all that aside, if you were just trading between the zones and looking for divergences, you would have gotten caught in this, like whiplash with all this movement. So what do you do about that? Well, that's what the RSI Power Zones workshop helps to do, is fill the gaps in the info that I can't present in just 45 minutes, but I've given you the basic building blocks, and then we go from there. So we take my 15 years experience, it's all content, there's no hype or anything else in there, it's just pure content. And it's all in the form of an on-demand video tutorial. It's housed in a secure resource center. When you sign up, you get immediate access to it. Now, it's great to learn on demand, right, and have immediate access. But just like how we're in-person learning here today, there's something to being able to interact with your teacher or your educator. So if anyone is in this current class, I call it, of the RSI Power Zones workshop, then they'll be invited to, okay, when you sign up, you'll be invited to a bonus session. It has live Q&A. We go through tickers. We answer any signals you may have seen or see emerging for a whole hour on Thursday, February 22nd. And if you can't attend live, don't worry, that gets recorded and put into your portal, okay? So again, all this is an online portal. Now, what is it that I teach you in there? Well, you'll learn to supercharger trading with my favorite RSI pattern setups. What I showed you today is just one of them. There are more. The best candlestick patterns that I found to use for trading RSI Power Zone signals, trading bar chart reversal signals with RSI Power Zones. This is different than the candle stuff, and quite a bit more. Okay, it's all laid out in this 7-step approach, and we go through the 7 steps in sequence. Now, what else is in the portal? Well, all of these combinations of zones versus divergences I've taught you today, you've seen. Here are the examples we went through today, right? Well, I can give you the rest of this cheat sheet, and it's all filled out. So in the portal is a takeaway tool called Cheat Sheets and Trading Approach. You just download the PDF, you have instant access to that, and it gives you this cheat sheet along with several others. So you get all this information that you can print out on an 8.5 by 11 and use with your trading. I do this, okay? I have a cheat sheet, and this paper waving sound, if you can hear it, is my cheat sheet right next to my desk. Because hey, sometimes things are moving fast and even I need a little double check reference. On top of all this, I want to make sure that you're actually seeing RSI Power Zones at work in a live environment. So you'll get examples of them daily by getting 30 days full access to the Skinny and the Mini. This includes a lot all on its own. So there's daily analysis of my baby, the E-mini S&P. I've also started including analysis of the NASDAQ Mini on Mondays and Wednesdays. You'll get immediate access once you sign up. So if you sign up, then you get to go into this portal, which shows you, this is the Skinny and the Mini, the latest one for the day. And then there's an archive that shows you the past 30 days, okay, all the past 30 days of reports published. And there's a videos archive that shows you the members only sessions I hold. So this is hours and hours of content that you get as well. So you get access to all of that for 30 days. So it starts immediately, but it will continue only through the end of February. All right. So I had gone through the issues archive, the monthly member sessions. So this one part, guys, you get 30 days. Everything else I just showed you before, you have access for a lifetime. Now, what does a Skinny on the Mini look like? Well, here is an example, and the format hasn't changed since. So you've got the chart. This is my chart that I mark up and update every day. You've got the details of the chart, and it's almost always a 60-minute chart because that's just my preferred time frame. That's like the pulse of the ES to me. You've got my prior commentary. I literally copy and paste what I said in the prior report. There's no way to get around me being accountable to my work. And I line it up with a gray vertical line on the chart. So I say, at this time, this is what I wrote. So it's very easy for you to see if it was effective or not. Then I recap market activity, sometimes longer than this, sometimes shorter. Then I give you my outlook for the session ahead. And I'm publishing anywhere between 8:30 Eastern and 9:15 Eastern, depending on what's going on, especially if there's 8:30 data or something like that. And again, the outlook varies in length, but it distinctly tells you my outlook is, and then I always give you the alternate scenario because unfortunately I don't have a crystal ball and I need to be accountable to you guys for, well, what do you do if the other scenario plays out? Then you've got resistance levels, which are potential price ceilings, support levels, potential price floors along the way, and then trend line descriptions. Even though I'm giving you a 60-minute chart, the trend lines are off the daily chart. And so you can go and recreate them yourself. And then when we have the monthly member sessions, we definitely talk about what's going on with them. Last but not least, and this is a lot in this one package, you get the RSI Power Zones indicator. Okay, so you can plot it on your screen just like I have it with the bull and bear zones. And it will look like this in your portal for the course, and you get it for all these different softwares. I'll name some of the popular ones here: TradeStation, Thinkorswim, NinjaTrader, etc. All right, so here's a couple comments from folks who've actually taken this course from me. Rob from Canada says, in just a few months, Hima's RSI indicator has become the standard of all of my charts. Dave from Washington says, I installed this indicator and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves. And Susie, who's been with me for a few months, said, my first month using RSI Power Zones was also my best trading month so far. I mean, that's great, right? Go Susie. So here's a special offer today for Traders Talk attendees, because this course isn't just sitting out there available for sale at any time. It's when I pull it out of the vault, okay? So you get the on-demand course, which on its own is a valued education of $997. 30 days of Skinny in the Mini access with all the stuff I provide. The value of that is $1747. The Power Zones indicator, $297 value, and the live Q&A bonus session, my time and energy spent, $197 value. If you tallied this all, this is over $3,000 in value, but I'm giving it to you today for $97, and you can sign up at himareddy.com/mama, M-A-M-A. Why? Because again, this is not your mama's momentum. And you'll see that my approaches pull from technical analysis, but also reflect my experience in all sides of trading and investing and analysis. So himareddy.com/mama. Why do you need this workshop? Why can't you just take what I taught you today and run with it? Well, it will give you detailed strategies on how to best trade with this indicator. It will prevent you from reinventing the wheel. You could go and try to figure out what else I'm doing, but why waste your time and energy? So again, save yourself time and money in the long haul by investing in your education today. Now, here's what's gonna happen after you sign up. I do this because, I don't know about you guys, but I get confused sometimes. Everybody has different checkout pages and all kinds of stuff. So here's what will happen. Immediately, you'll get an email that is your workshop resource center. That's the one that has the recording of the on-demand tutorial. It has all the indicator files. You can download as many as you like, and you have them for life. It has the cheat sheet as well. You'll also immediately get a separate email that is your Skinny Members Portal login info. So that takes you to a different part of the page, the members.himareddy.com page, and you log in there for all things Skinny in the Mini. So that would be today's report, the archive reports, and all the archived member sessions. Then over the next few hours, you'll get a welcome message from me. You'll get your live bonus webinar registration. You'll automatically be added for February 22nd. If you can't make it live, don't worry. It's recorded, added to your portal, and of course, your receipt. So I want to continue with a couple examples because I have 2 minutes, and I'm going to show you something now that I teach you how to do in the workshop. Okay, so let's take Amazon's 60-minute chart. Again, it's himareddy.com/mama, and this is available to you in theory till the whole month of February, but the sooner you sign up, the sooner you have access to all of that information. And we have our session together February 22nd, so you want to make sure you give yourself enough time to process it all and come with questions. So here's an Amazon 60-minute chart, again, reflective through yesterday. What if I told you that on this little bar, which was 1 p.m. January 18th, using momentum, just using momentum, you could have calculated a target of 1370.48. All right, that would have been kind of cool to know. And those of you who trade Amazon were well aware that we traded up through that and hit it on January 24th at 10 a.m. How do you do that? Well, that is one of my favorite RSI signals, and I teach you exactly how to do that in the course. Let's look at oil. Okay, we didn't cover commodities yet. Weekly chart. So again, himareddy.com/mama, and I'll use my last minute here to go through oil. Let's look at the weekly chart of oil and just get ourselves familiar with these signals. We've got bearish divergence near the bear resistance power zone. Bullish divergence, but this one's in no man's land. Okay, no man's land is that place between the zones, and I teach you in the workshop what to do. Usually it's to take very little action, or you have other qualifiers about it. Here we've got a bearish divergence in the bear resistance power zone, and then look at what happened that led to the latest recovering oil, okay? Triple bullish divergence. So guys, with that, my time is up. Unfortunately, no time for live examples, but hey, if you sign up for the course and join me February 22nd, we'll have plenty of time for live examples. So thanks again for your time. HimaReady.com/mama. Maybe Tanya, if you don't mind typing that in the room, then I'll hand the mic back over to you. Thanks, everyone.